All right, this is something that has completely changed how I view my trading completely. And it's super simple, and it just unlocked this like massive light bulb that just went off after I kind of realized this. And this is something that I kind of just thought of myself, but I want to explain the concept to you here in this video. So let me start off really quick with the kind of situation that I'm in and how the idea of this came about. And then we'll go through an example of how this could actually apply to you. And then you can plug in whatever numbers you want, whatever actual numbers you use, and see what, this could do. So I was, or I have been the past, it's almost like 20 months, but it's like let's call it 18-ish months. 18-ish months trading one strategy the same way. It works the same way up as it goes down, so it just depends upon the market conditions. It's the same thing. Over this time, been profitable and substantially, compared to my past experiences. But by no means is it blowing away what you see on social media. By no means is it 90% win rates with a 3-to-1 average risk reward. And no, it's not. My win rate, I'm looking at it right now, is around 45.23%. And my average win-loss is 1.48, meaning that if you divide my average winner by my average loser, you come out to 1.48. So do the math yourself. That's profitable system, profitable strategy. But my exact numbers don't need to be yours. Everyone can be different. That's just where I'm at. So going off that, you'd think, okay, good, you're profitable, cool, you've got some good stuff going. But is it incredibly profitable? Is it amazing compared to some standards you may see? No, but I think that the standards that we see on social media are maybe a little bit exaggerated, to a degree. But super promising piece to improve my stats and in a way that I think I can improve my stats going forward. And it's the flip one concept. What the flip one concept really came from was a trade that I took on NVIDIA back about a month or two ago. And I wrote this down, but I never got around to filming it because at the time I just was busy with other stuff. Now I finally got my thoughts to paper here. And this flip one concept was, and really quick, before I get into the example, I do want to thank the sponsor of today's video, Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
Have you ever experienced a situation where you take a trade and you lose, but you go back and say, oh man, I shouldn't have lost on that. I should not have lost. That was a winning trade. The chart ends up panning out, it hits your target that you originally had, but you either stopped out early or you messed something up. And in my case, I traded this stock based on different time frames. So I entered it based off of the 1 hour time frame, I believe, but I should have, or I entered it based off the 4 hour time frame, but I should have on the 1 hour time frame. And so I put my stop loss based on where it should be on the 4 hour time frame, but I shouldn't have on the 1 hour. So I was playing on two different time frames when I should have sticking to one time frame is how I trade. If I see a setup on the 1 hour time frame, I'm going to trade it based off the 1 hour time frame, set my stop and take profit accordingly. But there was an end of day. It was kind of end of the day. So I had this weird, long story short, the trade would have worked. It had a great move into the end of the day. Based on what I should have done per my strategy, I should have taken I would have actually hit my target at end of day. I would have locked the gains and then I would have been done. But I held it overnight and I used a wider stop, wider take profit, ends up losing when in theory it should have won. So the point is, this is called the flip. I think we all have experiences or examples of trades like this throughout our weeks or months or years. It just depends upon how much you trade, your trading volume. Okay, do I take one trade a day on average? Do I take 2 a day on average? Do I take 5 a month on average? Depends upon your volume. Nowadays, I've slowed down in terms of the amount of trades I take per month. It's a lot less than what it used to be. I day trade a lot less. I trade at bigger time frames a lot more. But that's just me, based off my data where I see more opportunity. But the point is, let's use some examples. I think these numbers actually may be pretty close to where my numbers were. But let's say on the trade that on average I risk $200. It's actually pretty close to my average win-loss, I guess like percentage-wise. So on average, let's say I lose $200 on losing trades. And on my winning trades, on average, I make $300. Okay, so I'm making about 1.5x on the winners than I lose on losers. And if I have about a 45% win rate, this is a profitable system, as I've proven to you. Let's say this NVIDIA trade lost me $200, but it should have in theory been a $300 win, right? If I just respected the strategy, didn't make any mistakes, disciplined, did what I was supposed to do, I would have made $300. If you can make one of those flips per month, let's say that you trade 20 times a month on average. If you make one flip per month like that, it's not that crazy to think about. Not that crazy. That's a $500 P&L swing. So instead of being down 200, you're now up 300. $500 P&L swing based off that sizing, based off my average loser being 200 and my average winner being 300. If I was to do that and make one flip per month and being more disciplined, staying true to the strategy, making sure I don't make this mistake again, that is $6,000 per year if you average one per month. So if you can make one less mistake per month, make one flip per month, that's $6,000 a year. And that, on that sizing, may be a lot, maybe not, depending on how you view this. $6,000 a year completely can change your P&L. That, in terms of the sizing in this example with this data, will dramatically change the course of your year. It will dramatically change how you view the total, all-encompassing trading in that year. Because if you do the math on these numbers that I've given you, you wouldn't be making a ton of money. You'd be just north of break even, but you're still making money, and now your game is just scaling it up. So over time, yes, scale it up, you've got a profitable system, but if you can scale it up little by little with your sizing and make a flip a month, or hey, maybe you don't take that many trades. If you can make a couple of flips per year, that can change your P&L by thousands of dollars with this sizing alone. Let alone, what if you had double the size? Your average loss was 200 and your average winner was 600. What if your average loss was 1,000 and your average win was 1,500? As you level it up, we're talking thousands and honestly tens of thousands of dollars that we're talking about now in a P&L change by end of year by flipping one per month. One per month. Sponsor resources down below, and if you're looking for a video more detailed on trading psychology, check out the video up on the screen now, and I'll see you guys in the next one. Peace.